won't stop till I hear him say,
Warning. The information that we convey in these videos and the content on this page simply provides general consumer information. It is not legal advice or regulatory guidance. It is not intended to sway your personal bias in any way. We are simply just relaying information already available to the general public. We highly suggest you do your own research and draft your own opinion on the topics disclosed in this video breakdown. Without further ado, sit back, relax, enjoy this video breakdown, and if you're not already subscribed to the YouTube channel, consider doing so now.
I mean, most of the people have no clue about the financial system. They have no clue what's actually going on. They are too busy with their little 9-to-5 life.
What is going on, CYPRX Advanced YouTubers? Welcome back to the CYPRX YouTube page. In today's video breakdown, I have a very interesting and intuitive video breakdown for you all. Pay close attention, understand the message that I'm attempting to relay to you all. Understand truly that the elites have everyone completely brainwashed, ladies and gentlemen. The entire population is fighting over the wrong thing at the current moment in time. The media and the news are designed to distract the general public and control people's attention. There are bigger things going on that most people cannot even fathom. Ladies and gentlemen, here on this YouTube channel, I am attempting to show you this information. Again, nothing that we constitute here is financial advice, and everything that we relay here is already available to the general public. Sit back, relax, and enjoy this video breakdown.
Cash is king, but in a socially distant world where payment is as easy as... Does cash still hold the same value?
Cash is still relevant, but cash is no longer king. Although people in this country and around the world do continue to use cash to purchase things every day, that is decreasing.
Electronic payments have cannibalized checks. Card payments have grown, but cash has remained king. 2/3 of transactions under $10 are done in cash.
The unprecedented surge in the demand for contactless payment has also shown outstanding performances for major companies offering cashless payment methods like Apple, Square, and PayPal.
You're seeing digital payments in this crisis move from being a nice-to-have capability to a must-have essential service.
We're seeing a corresponding increase in digital transactions as we're seeing a decrease in the use of cash.
Now, something that everyone must understand is that the elites have been planning a cashless society for the longest time. Corporate capitalism needs the money to be digital, and for the ground level touch points to be replaced with standardized applications hosted in smartphones that follow us everywhere we go. Ladies and gentlemen, we're about to move to a fully digitalized system where they are about to be able to track everyone's every single movement. That is absolutely insane. But before we make this drastic move to a digital economy, there has to be some type of paradigm shift. There has to be some type of massive liquidation event, and big players in the market or scams in the market, they have to get liquidated from this industry before this all takes place. With that being said, what we are about to live through in this generation is about to be life-changing and will be remembered for many years to come.
Reasonable inflation forecast. And so that's really like the problem with the economy right now, is that wages aren't keeping up with inflation. It costs $460 more per month to buy what you bought last year. You can't afford to do that. Your standard of living is going down. GDP is going down. And I don't think markets have fully digested that and the higher interest rates. I think Jamie's right.
It's saying, among other things, that the Fed has yet to make progress, ultimately lowering inflation. She goes on to say she does not expect the Fed to lower rates next year. Now, this echoes some noise we've heard out of other Fed governors that this trajectory in rates, forget about whether they keep going up through the new year, they're certainly not going to come down. They're certainly not going to come down.
I mean, I think we can debate sort of which adjectives to use, but the reality is our view has been that there are too many crypto exchanges, there are too many cryptocurrencies, and there are too many cryptocurrencies and tokens. There's going to need to be some amount of consolidation. I mean, perhaps it's a little bit analogous to back in the dot-com era, right? There were too many dot-com stocks, and then there was a big shakeout, and then there were clearly some really significant dot-com companies that became extremely successful. So, we think there's some elements of that in what we're seeing here.
So we've been in cash No bonds, no stocks with our long-term investment portfolio. We're just letting this market fall and trade lower. That's from a long-term perspective. So large cap, large amounts of money, or big retirement money that you kind of want passive investing. We're just letting this market work itself out. It's a long way from kicking back into a new bull market. And the reality is we could get into something much uglier eventually that turns into a complacency rally where we see the markets rally for potentially a few months, and then they could easily roll over and eventually move into a much bigger bear market. And there'll be lots of opportunity, I think, to the downside. But in terms of large capital, long-term capital, we are 100% in cash from that standpoint.
The 1998 and 2008 financial crisis, with ingredients like over-leveraged derivatives and reliance on obsolete risk models. The thing is that nobody's paying attention to is that lessons are being ignored from those financial times. Again, the next catastrophe will be exponentially larger than the last two, and the countdown has already begun for the 2030 Great Reset. The best thing that you can do as an investor is educate yourself and those around you, so that way you can survive during this next financial crisis. Ladies and gentlemen, understand that the majority of individuals walking amongst the general public have no idea on what is taking place in our financial markets, let alone understanding truly what is happening behind the scenes in our financial ecosystem. There is going to be a group of individuals in the future that did their research, that came out on top by understanding what is really happening behind the big key players making moves behind the scenes. And then there's also going to be a group of individuals, a larger group of individuals that slept on this information, that didn't do their research, that remained stuck in the matrix and in the system, and did not attempt to free themselves from this digital slavery that we are about to experience.
Would be more regulation, of course. That could be basically preventing a real new bull market. But this is all early out. We're in a bear market right now. We're in a liquidity crisis. And I think people should really be patient. This whole talk about CBDCs, I mean, we have to expect that they're coming with something in the next few years. And if that's happening, we're all going to be digital slaves of the central banks. I don't see the crypto sector being strong enough and united enough at the moment to really put something against it. Instead, it's so fragmentic. As I said already, there's so much scam and so much bad players and projects that are just not good in the market. And there has been so much greed and so much speculation. So I hope that at some point we will find this way towards decentralization and DeFi, because it could take mankind into a better future. But so far, the promise has not been fulfilled, I would have to say. And but not the vast majority of people will be able to do that. So we are far away from a mass adoption. Control.
But it's going to be positioned as though it's not, is what you're trying to say. But a CBDC is still a fiat currency.
Yes, exactly. It is. But it's controlled.
But it's going to be positioned as though it's not, is what you're trying to say.
Right. I mean, most of the people have no clue about the financial system. They have no clue what's actually going on. They are too busy with their little 9-to-5 life. And I mean, most of the people have no clue about the financial system. They have no clue what's actually going on. They are too busy with their little 9-to-5 life. They are trying to position the CBDCs as some form of cryptocurrencies. But at the end of the day, it's the same money that we have already, given out by the central banks directly, and then it's controllable money similar to what they have in China with the social credits. And I think it's a very unfortunate future for all of us.
Ahead now, and I'm talking about way ahead, what signs would you be looking out for the end of the recession? In other words, hey, spring is here, it's time to get back into buying mode. Hey, spring is here, it's time to get back into buying mode. In other words, hey, spring is here, it's time to get back into buying mode.
Okay, you wait. So
I saw a back-tested presentation. It was put out by 42 Macro yesterday, and they put out a slide that goes on when the bottom of equities generally happens, and where it occurs is usually 1 month at a minimum from when the Fed pivots. They outlined from when the Fed pivots, from when the Fed pivots.
Stop till I hear him say, oh, oh, la, 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 la.